Hello, ladies and gentlemen. Happy Memorial Day to you all for those of you who are recognizing this day today. Hopefully, you guys had some time off and were able to enjoy the relaxation that came with it. I sure did. I'm glad I was able to spend some time with family and friends today. Decided to take the day off because of the low volatility, especially with the dollar-based pairs that were coincided with the U.S. bank holiday today. So very low volatility, slow movement across the pairs that I trade, but very excited to get back at it tomorrow morning. So because of that, I decided it wasn't prudent to create a daily market breakdown video today. So I decided to still provide some value to you all and create a video on a very nice illustration on exactly how we break down the market. So this is exactly how the Aerial Effects team, with all of its expert traders, this is exactly how we look at the markets each and every day and what we look for. I feel this example is a beautiful example to give you insight into exactly the step-by-step way in which we dissect the markets. Has so many confluences, really built up a lot of confluence around this trade to be able to teach you and help you understand exactly what smart money entails and how we trade it. All right, so hopefully this video won't be too long. I'm going to try to make it as short as possible because I don't want to take up too much of your time tonight. However, I do feel it is necessary to break down this in depth so you have a clear understanding of exactly how we look at the markets and what we are looking for, not only within this trade, but in every single trade that we take, so that you can take this information, learn from it, and apply it yourselves, which is exactly what we want from you guys. So you're not dependent on us, but you're self-sufficient. And that's the goal. So always, as always, in every single video, I always start off by talking about market structure as it is so very important. So the focus, and I'm just going to get rid of this because this doesn't matter anymore since a higher high was already made. The focus of this video will be in here. So this was the trade that was taken at 1.62. Okay, so this is the area in which I'm going to be discussing. However, I feel it's necessary to go about a top-down analysis. So as we can see, we are higher time frame bearish here. We had that lower low. We did have a run on liquidity. Okay, so this was not a break of structure. This was just a run on liquidity. And then we had the lower low again. So we are in a bearish market. Now, trading within this current pullback phase that we're currently in, we're making higher highs and higher lows. So we should, in this time frame, in this trend, be buying, be continuing to buy until we reach some sort of area of interest where we can be looking to sell. Now, because we made this high and this low, we can pull a fib from the high to the low that was made right here. And now we're looking to be selling on the higher time frames at periods or areas of premium. So that really lines up with 61.8, 78.6, just anywhere in this vicinity. Now what we can notice is that this was pretty much a linear move to the downside, a low resistance liquidity run. Okay, so if we zoom into this, we have just a few areas of interest. One, right around here, this area of supply at 1.67, the 61.8, which we came into kind of nicely, and now we're seeing the retracement. But ultimately, I wanted to push back up into this area of premium. This was where, if we zoom out, you see these highs in here? This is where the liquidity run occurred, this buy to sell that we took out these highs. So as most of you may know, or how I teach in my VIP, we understand that when the liquidity runs occur and then we continue with the overall trend, we usually create some sort of repricing event. And this is just the bank algorithms just working. That is how they work. So we had a buy to sell, repricing, consolidation, continuation down. So this is really the area in which we want to be selling from. In addition to that, we can see that when we took liquidity from this high, we had a buy to sell. The counter trend here, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This should have been the higher low if we were to continue. We can see that this demand that we came into was invalidated. Why? Because we never made the higher high. We ended up making a lower low. So now prior demand turns supply. That's what really causes the repricing most of the time. It's not always very clear, but that's most of the time how it occurs. That's why you see buy to sell, consolidation, or some sort of just range, and then you see the continuation short, having invalidated the prior demand. Now this turns supply, and this is really where we want to push back up into to take shorts. So zooming back out, we can see that this is a higher time frame area of interest. 1.7 to 1.71 is really where I would like to be selling this. And we can see that in here, we haven't come up into it yet. We haven't reached this level. Not even in here. The highest price that occurred at May 11th, so about 2 weeks ago. We still haven't come up into our level, which makes me think that we are going to react off of something in here, which I'll talk about in a little bit, but ultimately continue up since we have more room to go to the upside. So let me get rid of this. And now that we can see our higher highs, higher lows forming on a lower time frame, we can be looking to buy since we have broken the counter trend here. So once we have made that lower low, that lower high, the lower low, we have broken above it, made that higher high. So now we can still be looking for continuations up because we're a counter trend bullish, and we have actually cleared it right here as well. So counter trend bullish, now we can expect the overall pullback to commence. All right, so now let's scale into what's going on within here. So when I recognize this setup, there are many confluences that gave me conviction for longs. Higher time frame, well, higher time frame, we're bearish, obviously, but this current time frame, we're bullish, okay? And we can be taking these counter trend moves as we go, because if we simply wait for price to come up into this higher time frame level, we could be waiting weeks, months, or even a whole year for us to even take a trade. So that's why it's okay to trade counter trend as long as you have the proper confluences that go along with it, and that you have more room to go to the upside prior to coming into the higher time frame level. So looking at this, we can see we had the higher high, we had the higher low, and then we had the higher high. Okay, on a lower time frame, the 15-minute, we can see this accumulation that occurred. Okay, we had beautiful accumulation. We had the selling climax, our secondary test, our spring break of structure, cleared the high, made the higher high. So the counter trend has been broken. We can just see it with this. This is the counter trend. Broken. Higher high was formed. Now we should be looking for the test for a continuation, and that's exactly what we saw. Okay, so I didn't trade anything in here because technically we were still within this pullback phase, right? We're still making lower lows and lower highs. But right when I saw this counter trend break, this accumulation that occurred, and it came into this prior low and it swept the low, we can see that this low was taken by a few pips, right? Liquidity run. Now we can be taking a buy position off of a pullback. I didn't see this in time. I only saw price when it was trading within here because I don't really trade Euro NZD that often, but I happened to stumble across it and notice price when it was trading in here. So that's why I didn't see this, but that could have been a beautiful trade setup right in there, right? So now, I mean, I can even just go in and look at the indicators. And when we see price potentially accumulating or distributing, we can look at volume price divergence. And we can see clearly that we are diverging. Price is selling off, yet volume is increasing, okay? This is the exact point that matches up with this point, right? Price falling, volume rising, indicates a potential reversal. And that's exactly what we got with the break of structure, okay? So now that we have created the counter trend break, higher high, higher low, higher high, higher low. Once we clear this level, we are counter trend bullish now and higher time frame bullish because overall we're bullish here, right? But now once we break this level, lower low, lower high, lower low, higher high, now we're counter trend and higher time frame trend bullish. So now we should be looking for pullbacks to go long, right? So because now we know this is the end of the pullback. And we can just see that as we have moved into discounted prices, hit that 61.8 golden level to the T. So many confluences surrounding ourselves right now, ladies and gentlemen. So now, let's get into the nitty-gritty. Let me go back to the hourly. So I will be scaling to the 15-minute, but I want to show you structure. Higher high was formed. Now we should expect a higher low. So obviously, when a higher high is formed, we want price to pull back into a discounted level. We never want to be buying above the 50% nor selling below the 50%. Meaning, if I pull my fib from the bottom to the top, we should not be looking to buy this above the 50% mark. Anything below it, that's discount. That's really where we should be buying because everyone likes to get the best bang for their buck, right? No one wants to buy anything at a premium. So now we wait. Going down to the 15-minute, we can scale in. So price has created equal lows. We finally made that higher high. Price has created equal lows. So this will act as the draw on liquidity for price to come to take before moving in the opposite or the correct direction, I should say. So this is where we need to be looking for areas of interest below the liquidity, right? So somewhere maybe in here to test, and this also acts as a test of the accumulation. So we sprung, we tested, we made the higher high, and then we came down and tested that accumulation zone again. And really where I would be looking to buy this, even if the equal lows weren't present, would be right here. This is a clear area of demand that has not come into. So right there, we finally came into it. And that's exactly what created the sell to buy, in addition to a couple other confluences, which I'll go over in a second. But even if these equal lows were not present, I would still be looking to buy around that level because it is discount, it is a test of the accumulation that took liquidity, and it's an area of demand that has not been mitigated yet, which is why we came into it perfectly. So now price is trading in here. We have to understand time and price. In everything we do, we have to understand what time of the day is liquidity being formed, what time of the day is liquidity being taken, what time of the day is it mitigating price, filling balance, et cetera, et cetera. So having the understanding that we are creating equal highs here. Equal highs. This is the Asian session, okay? 15-minute time frame, start of the Asian session, all the way to the beginning of London session. It's just chop, okay? These are the equal highs of the Asian session. So the buy side liquidity is resting above. Usually you create some sort of range or consolidation or some sort of liquidity built up prior to London session. London session is really where you see the manipulation. And so you can see manipulation occur during New York session as well, but Asian session is usually used to build liquidity prior to coming into the London and New York sessions. So we can see Asian session, we're creating these equal highs, 1, 2, 3. Now, when London session occurs, probably we're going to see some sort of liquidity run. Why? Because we have to take the stop losses. Many people, if they're selling at these triple tops, this resistance, many people are going to be placing their stop loss above the resistance. That's why we come take it. In addition, it also acts as a fake out because many people are trading the break of the resistance, the engulfing above resistance, people buy. Then it goes right back to the downside, takes their stop loss because they place it below the prior low. What is also this low? It also happens to line up with these equal lows, and this is also the Asian low. So we can see here, buy side liquidity taken, inducing and attracting buyers, attracting and hitting the buy stops, people placing buy stops above resistance. Hit those stops below the low. Come down, take this the stop losses that when people were buying, come and hit the sell stops here. Sells below the support, the breakout engulfing below support. People are selling. Come and take those sell stops. Come back up, placing the stop loss above the previous high. Run the stop losses from the sell positions that traders were trading. You notice how a lot of the times, and I see many people telling me this, and I see it all over social media, is why does my stop loss get hit to the T and then price reverse? It's like they're hitting my stop loss, like they know exactly where I'm placing it and are doing it on purpose. Well, they do. They do know exactly where you're placing your stop loss. However, they're not targeting just you. It wouldn't be worth it because you are a tiny little grain of sand on an entire beach full of traders and volume. Your volume, my volume, any other professional trader's volume is nothing compared to institutional liquidity. So even though it may sound like or may seem like they're taking your stop loss and only your stop loss, we have to understand what liquidity is. It is a group of stop losses. It is a group of orders. There's so much liquidity being built up here. You may have placed your stop loss above this level or below this level. They're going to come run it because they're taking a lot of liquidity. They're grabbing that to then place their orders to short off because they have to free up liquidity to short off. They now short off, take your liquidity. Now there's free liquidity. Now the stop losses are taken, okay? That requires you to buy back your position because you were selling right in here. Now you have to buy back your position when price comes back up and hits your stop loss. You have to sell back your position when you're buying. If you're buying, you have to sell back your position because you're placing stop losses below it. That's how you get out of trades. So that frees up liquidity, allows for the institutions to then place the bulk of their orders because now there's a ton of liquidity being built up. Now they don't have to come back down to the same level and place the remainder of their orders because they can do it all at once because there's enough liquidity for them to place all of that volume. That's why they run equal highs and lows because it frees up liquidity for them to then place their massive orders. That's the only way they can do so, or else they would slip. So now we have come down and tested the accumulation zone. So I would have bought it here anyways. Besides, even if this never occurred, anything in here, even if you had no idea what was going on in Asian session, these equal lows, equal highs, whatever, the buy, to sell, to buy, doesn't matter. I would have placed my order here anyways. But even if you do have the understanding of this, which I'm going over now, you would know that one, you could be buying here, but two, you really should be looking for this level to be met after the higher high is made. So understanding the liquidity run, the buy, to sell, to buy, this is the institutionally sponsored sell to buy move, I guess you could say. But why would you want to be selling this below the low here if we're in an uptrend? That's what I don't understand. This tells me that people are stupid because they're trying to sell this in an uptrend after the higher high and the counter trend break was made. That's why it's so important, guys, that you have an understanding of structure. If you don't, something as easy as a break of support, if you're stupid enough to sell this as a retail trader, would screw you because one, well, it's just dumb because who would sell below support? Because that's probably just going to be a sell to buy, especially when we're in an uptrend after the confluence was made after the counter trend break of structure. But if you're buying, why would you want to be buying before liquidity is run to the downside? You have equal lows. Why are you buying right here, right now? You don't need to be doing that, especially because London session occurs. You have equal highs from Asian. Why would you want to buy the breakout when you should suspect price reversing back to the downside to take your stop loss prior to the overall move occurring? That's why so many people lose and so many people get wicked out of their stop losses every time before the ultimate move is made. So I'm sure many people can relate to this. And this is the reason why it's happening to you. It happened to me before when I was trading retail years and years ago. I have been victim to this so many times before. But now having this understanding, I can be patient and wait for the clues to produce itself. Wait for the banks and institutions to get into the market, leave their clues as to where they're getting in and why they're getting in, which that's the whole reason of this video. But then take advantage of the mitigation and continuations, right? So we can get in where they can get in. So now going to the 1 hour time frame, we can see now this is the area of interest. Now we talked about everything in here. We broke counter and structure. We're bullish on the higher and lower time frames. We made the higher high again. So now we should be pulling back for a higher low for a continuation. Even if you had no idea what was going on in here or in here, you could easily just pull a fib and place it at the 61.8, which happens to line up with the region of price. And you would have gotten lucky because at least you're trading with the trend, which is smart, but there should be more confluence than just a fib level entry. But in this case, it would have played out because of what the smart money was doing in here. That's why it played out for you. Another example I can give you guys is how many times have you potentially maybe placed a position at a trend line and it went in your direction? And you're like, oh, well, this retail stuff works. Well, the reason why it happened to work at that time was because there was probably some form of smart money, institutionally sponsored move that for the institutions and banks were smart to place certain orders at those levels, but happened to line up with the trend line for you retail traders. So it happened to line up for you, but it was always institutionally sponsored. It just so happened to be in alignment with each other, which is why some people think that retail works. Sometimes it does because it's in alignment with the smart money move, but most of the time it doesn't. So you have to understand, well, what is a trend line? If you're trading a trend line, who moves the market? First of all, who moves the market? The banks and institutions. That's a given. So are they trading trend lines? What is the whole point of a trend line? A trend line is simply just, well, one, to direct trend for sure, but also it acts as an area for price. And this so happened, if you place this, you would have gotten it right because of the smart money that's involved in here,
which I'll go over in a minute within this, but you happen to get it right because of the smart money. So 1 touch, 2 touch, 3 touch, the retail traders would have won this trade. But how many times, maybe, I don't know, we can go, I don't know, here, line it up, trend line, touch, touch, third touch, oh, they're selling, and then right back to the upside, hit their stop loss. Well, it's because it's liquidity to be taken. That's essentially what it is. That's what drives the market, volume and liquidity, okay, and your stop losses. So that's why retail just doesn't work to begin with. Smart money will always trump everything. So now we have made the higher high. We can also identify these equal highs. This is the draw on liquidity. The draw on liquidity simply means the target in which the banks and institutions will look to go next, will look to target next. So upon the pullback, gives us more conviction of the buys to begin with, because now we can look to target the equal highs. And we know equal highs and equal lows are never sustained. They're liquidity. They're meant to be run. So that's the draw on liquidity. We'll just mark that up there. And now we have also created, prior to coming into these levels, which I talk about so much within our VIP, is liquidity being built up prior to coming into the overall level, right? So liquidity, the Asian low, this is the Asian low. So many people, what they would be doing is they would look to pull back, pull a fib from the low to the high, pull a fib and buy it off of this level, which is why I tell you again, simple just fib confluences don't always work. You have to have it in conjunction with your smart money. And in this case, it didn't work out because you have to understand this is the area of interest in which you have to be buying. But 2, this is the Asian session low, which is just meant to be run anyways. So pulling a fib from the Asian low to the high, you could get a reaction like you had here, probably enticing some buyers, right? But then ultimately fall right back to the downside, hit your stop loss, then it goes in the right direction. You're wondering why it hit your stop loss by a few pips and then moved in the right direction, because you didn't have it right. You were trading the retail. So the Asian low was created. We can see the equal highs were intact. We came back down, swept the liquidity, coming into the higher time frame level. And now we can just look at, where could we possibly be buying? You could go to the lower time frames, maybe find some sort of lower time frame level. There's really nothing in here that really tells me anything. It's just a lot of imbalance. So 1 hour time frame, we can see the imbalance began here and ended there, this wick. Straight buying volume, no selling was offered. So we can just simply go to the 50%, place our order at the 50%, and we would have gotten basically a wick entry. We did get a wick entry. In addition to that, also, where was the 50%, which is right here? Where's the nearest psych level? Happens to line up with 1.62. So ultimately, 1.62 should have been the level. And that's exactly where I entered because of the psych level. Imbalance, institutionally sponsored sell to buy, all these confluences, counter trend bullish, right? Higher time frame trend bullish, psych level, discount, liquidity run. Now we're looking for the continuation. That's exactly why I reacted there and went all the way to the upside. Because we're targeting a higher time frame level here because we're in the overall pullback phase and we have broken counter trend structure here. So now we look for the pullback again. Where is our area of discount? Well, after the liquidity run, the sell, this is the institutionally sponsored liquidity run, sell to buy, we have imbalance in here. We want to get back down into discount. We can pull our fib, just zooming out here, from the low to the high, but where was the liquidity run? And that's exactly what I was talking about here. Where was the liquidity run in here? It was ran right here. So now the demand that was in here failed. It didn't make the higher high. We made the lower low. So now this becomes supply, and now this is an area which we want to target. So based upon that, let me get rid of this now. We're into discount. We want to be buying at this area of demand because this area of demand, we reacted and made the higher high. So now we can confirm that this is another area of demand in which would play out. If we ran it and create a lower low, then this demand would not be valid because the lower low was commenced, right? The lower low was made. Now this should turn into supply, and that's where we would pull back to get in for a short, but we continue with the trend, so we're just playing off of the areas of demand. So we can see here, within the institutionally sponsored volume, we have this 15-minute area of demand here, lower time frame, and then right above it, I have 1.63, which is a psych level. It happens to line up with the imbalance that's just right in here somewhere, right? No, so it's not exactly, if I just go over here, it's not exactly the 50% or the full imbalance fill, which is right there, but it's really close. And we want to be playing off of these psych levels because these round figures are where these banks and institutions are looking to place the bulk of their orders from. That's where the liquidity is. So that's really where we want to be placing our orders too. So 1.63, and maybe this 15-minute, that 15-minute I just talked about, area of demand, 1.629, something like that. So now we are in this pullback phase. 1 hour time frame. I even took a short from here. Now it's okay to be selling counter trend, even though we're looking for buys, because we haven't come into this buying level yet. And now we're making lower lows and lower highs because the higher high was already filled, like the higher high was made, and then the lower low commenced, meaning higher high, higher low, higher high. Now we broke counter trend structure. We broke below this level. So now we're counter trend bearish. So now we should be expecting the higher low, the overall pullback, the overall higher low for then the higher high. So lower low was formed. Price came above this level. I was looking for sells in this level. We just never got confirmation. But we ran liquidity. We ran the high. We broke counter trend structure. So this was the confirmation. So this counter trend bullish move, higher high, higher low, higher high, higher low, higher high, right? That's why we never sold it in here, because we never broke counter trend structure. If we did something like this, right, reacted from our area of supply, which is like, let's just say it's right there, had a reaction, and then, we did something like this, lower low, then I would have looked to sell it, because then the counter trend would have been broken. But we never broke counter trend. We never confirmed it. It finally went short after this high was made. So it acted as the liquidity run, right? So now the counter trend has been broken, closed below the prior structure. That's why we never made the higher high, right? So now this area turns into supply. We can see the imbalance move as a result, came into it to the T, and then we had the lower low. So now we should be looking for a pullback lower high into the overall level down here. Now, what if this occurred? Let me quiz you guys. And this is all just, you guys can answer this in your head. What if price did this? Lower low, lower high, lower low. Would we be looking to sell it here? Why? Or why not? Well, the answer is no. But why not? Why wouldn't we want to be selling here? Because we already hit the overall level, so we should be looking for buys now, or pullbacks for buys, right? Because the higher time frame has been achieved. This is the higher time frame. So we never hit that level yet. So now we can be looking for counter trend shorts into the level and then be buying, because now we've confirmed the shorts with a counter trend break structure and liquidity run. So now this last institutionally sponsored buying volume into the low, we can pull back into. This is the start of the buying volume. You could have also had an area of supply in here, because we can see this red candle. So going down to the 15-minute, we can see that again on the lower time frame. Just look how this works. It's all fractal, guys. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. We never made the higher high again. So now this area of demand shifts or flips to supply. So that's why I had two levels. And I placed a level here and a level here. It didn't quite hit this supply level because we never pushed up into it. That's okay. We ultimately made the lower low in comparison to this low. So now this order can be deleted. But I had one here just in case we just hit the overall buy to sell volume, institutionally sponsored move, which we did, and now we're in profit. But that should be the rationale behind these entries. So now we're counter trend bearish and semi higher time frame bearish here, right? We have broken counter trend structure. We've come up into the level, never made the higher high. We've made the lower low now, closing below the prior swing point. Higher high, higher low, higher high, higher low. Failed to make that higher high, made the lower low, Demand flips to supply, so I have these two levels. So I have this level and then this level, just in case we push up into, this last buy to sell and just keep going with the continuation. But ultimately, these two levels I'm going to be looking to short, stops above this high here. Okay, so, or this high here, doesn't really matter. Going to the higher time frame now, we're looking to potentially short this into the low, into 1.63 to then buy it. What are we forming? Equal lows, draw on liquidity. I see this all the time. Is liquidity being presented or arranged prior to the higher time frame level? In this case, yes. The equal lows are forming, acts as the draw on liquidity to then free up liquidity. Sorry, I was actually going to ask a question, but I kind of answered that really quick. I was going to ask, why is liquidity being formed here? Because it needs to free up liquidity in order to place the large volume that it's going to be needing right here for when it buys up. And of course, nothing's ever 100%. I assume we're going to be buying from here because of all the confluences. If price just absolutely plummets to the downside, it doesn't matter. I would place this buy order any day of any week of any year of any decade. I don't care. This so much confluence around 1.63. If we lose, we lose. Nothing's ever 100%, even with smart money. But it gives us a high probability because we're trading with the clues that the banks leave. So freeing up liquidity allows them to place the bulk orders at these levels. So if we push up into these levels, I will be looking to sell it. In addition, it acts as liquidity to be taken. So if we push up into these levels, besides all the confluence that I've just talked about here, it gives us more conviction because we have liquidity to target. At least come down and take the liquidity. Maybe it won't hit this level, but at least it's going to come down and sweep the low, and we can even place our stop loss, our take profits here, or even just take partials here, and then take the rest of our position off the table once it hits the higher time frame. Okay, so that is my rationale behind it. We should be looking to potentially sell in here to ultimately buy from this level because of all the confluences that occurred here, that are occurring here, and ultimately our overall target of 1.7, 1.71. So hopefully, guys, you have the understanding of how exactly we look at charts each and every day. Nothing should be forced. You have to build confluence. You have to stick to your risk management. You have to look at market structure. You have to build and look at so many confluences to be able to take highly probable trades. And we can just see here, my overall target is this blue box. So it's not exact. It's between 1.7 and 1.71. And if I can just pull my risk to reward here. Just go 1.62. The stop loss was below the low here. You can see the low here because this is the institutionally sponsored sell volume. So let's just go 87 pips, and we'll take this all the way up. Now, many people would say, well, it's 87 pips. That's huge. I don't care. The risk to reward is there. It's a 1 to 9.5, meaning if I lose 1%. If I win 9.5%. That's a pretty darn good risk to reward for me. So stop looking at the stop loss like pip value. Many people would say, oh, I'd rather have 10 pip stop loss rather than 87. Well, okay, but look at the risk to reward associated with the 87 pip stop loss. It's a 1 to 9.5. So it's still a good trade. Now, if the take profit was right here, then yeah, this probably wouldn't be a good trade because it's only a 1 to 2. So you would just leave it alone. But because it is a 1 to 9.5, you would take it, which is why I did it, even though I had an 87 pip stop loss. But it doesn't matter because if you use position size calculator right here, you would know that no matter what stop loss you have, you can still only risk 1%. It's just a different lot size. So Euro NZD, USD, say account size $100,000, risk 1%, stop loss 87 pips. Calculate, I would use 1.75 lots on that trade. So 1.75 lots, if I hit stop loss with an 87 pip stop loss, I'm still only losing 1%, right? But what if I had a 10 pip stop loss? Then I change it. It's still 1%, but it's just more volume being traded. So I would then trade with 15.26 lots. May sound like more volume, which it is more volume, but that doesn't mean you're going to be losing the same amount. It's 15.62 lots. If I hit stop loss on 10 pip stop loss, I'm still only losing 1%. So utilize position size calculator. Gives you exactly the sizing you need to stay on par with your risk management. Because I'm telling you, if you don't use good risk management, no matter how good your entry strategy is or strategy you're using, whatever, you're still not going to be profitable because you don't know how to use risk management. Number one for professional traders. So selling, potentially buying, mark off these levels, and we're going to be looking to buy all the way up into this region of price here. And you can see the price that I have here. So guys, I hope that you understand it. I'm very assertive with what I teach and how I teach because I want you guys to grasp this understanding, and I want you guys to understand how not to trade, how retail traders lose, so that we can do the opposite. If the masses are doing one thing, trading retail, do the opposite. Don't follow along with the herd. Don't be a sheep, right? So hopefully you guys took some value from this, and maybe can take a couple good trades this week because of it. We can see the 4-hour 50 EMA acts as another confluence for our potential sells. If we push up into our levels, tap off the 4-hour 50, continue down. Daily 50 EMA as well. We're above the daily 50. If we push up into these levels, ultimately we want to be buying from these levels down here. Could act as the tap into the daily 50 for then a continuation to the upside into this level of supply here. So if you have any questions about this, please let me know. I'll be happy to help you in any way, in any capacity that I can. And I want to just remind you guys, we have that Memorial Day promo that should be over today. I'm going to extend it another day or two just because we did post it late. I was anticipating I'm posting it on Friday, but we never got to it until this morning. So I'm going to leave that open for another couple days. 25% off all products and services. Want you guys to really take advantage of that because I don't want money to be a factor in learning and investing in your knowledge. I want you guys to be able to take advantage of this. Our prices are already stupid low anyways, but I'm going to decrease it a little more because I want you guys to just take that step and to come into a community that really cares about one another, that teaches the right way and how to trade. So guys, if you're interested, please let me know. I'll be happy to help you guys. And even if you don't want to join, we still have our free Discord community that you can get into. It's just a public Discord. We send occasional setups there, some analysis on occasion. I'm actually going to be sending this video into the free channel today just because I feel like this is good value. And it's a Memorial Day. I'm in a good mood today as well. So guys, have a good rest of your day, and we can talk to you tomorrow for our next London, New York session trading day. Have a good one.